What's up, everyone? How you guys doing today? Just give me a second here. I'm just getting set up, and then we're just going to break down some trades today. We're coming to the end of the earnings season here, and I just want to make sure that we end off on a high note here. This has been an unbelievable earnings season for me and my fund and my partner. This has been a time. So I hope you guys have had a good earnings season as well. Let's end it off with a bang here. We're going to go through, break down some trades. Ask me any questions, and I'll be happy to answer. Okay. So, need to go back there for a second. I want to figure out a way to do this setup a little quicker in the morning. So yeah, just going to break down a few trades today. A couple of things I was looking at. To start off, I took a look at JD. It's this Chinese company looking at moving back to an exchange in Hong Kong. But there's a couple of good things about this company in terms of the earnings event coming up. So they have an earnings event coming up on May 15th. So I believe that's in 2 days. So on Friday. Now, there's a couple things about this event that I want to point out to people. First thing I need to look at here is it releasing in the morning or at night? So let's type in the ticker, and what we see is perfect. So it's releasing in the morning on Friday. The reason this is so important is if it was releasing in the evening, we would have to consider a lot more than just the earnings event because we would be stuck holding the position over the weekend. So all of a sudden, like something we always look for when we're doing earnings trades is we look to isolate the event as much as possible, right? So when you look at things from a quantitative perspective, you want to break down what you're looking at so that you can isolate as many variables as you can so you can really test them. And what we do when we look at earnings trading is we try to strip away as much external things as possible. So if it's trading after hours or in the morning, for example, we'll buy the asset right at market close the day before and sell it right at the market open, with a little bit of room for adjustment, but that's the general rule that we follow. So when we have a weekend involved, all of a sudden we have a lot more risk, and it's usually something we'll stay away from. So, and a lot of companies will stay away from it too, actually. But since JD is 9 a.m. on Friday, we can take a look at this. There's good option volume being traded here, so we can actually make a trade on this if we want to. But what do we look for when we're trading options around an earnings event like this? Well, what we really need to consider is how much does the market think that this stock is going to move on its earnings versus how much does it move on average? And what would our results be if we had bought options or sold options around this event in the past, right? These are all factors that we consider going into this event, amongst others. We've tested all of these, and trading earnings using these factors is an extremely profitable strategy, like extremely profitable. So let's see what we got here, right? So JD, the market is implying a move. Okay, let me see if I can make this a little bigger for you guys. Cool. Hopefully that helps. So the market is implying a move of 7.55% for the earnings event. So basically on Friday, from when the company releases earnings at 9 a.m. in the morning, the market is expecting a move either up or down of 7.55% for JD. But when we look historically, right, we can see that this thing does not move that much on average, right? We've had some big movers like 7.7, but most of them are like in around the 3s, the 4s, the 5s, with a couple of big movers in recent times that really, blew out how much the market thought it was going to move. And that happens, and that's reflected in the P&L here, right? So these are the average moves. And then if we add this is the average move compared to the market expected move. And what we can see is the market expected move is more often than not outpacing how much the thing actually ends up moving. So another way we can see that reflected, which gives us more confidence that the market might be overstating how much this is going to move, is the historical straddle P&L. So what this tells us is basically if we had bought options around the events in the past, how would we have performed? Right? If we had bought an at-the-money straddle, so an at-the-money put and an at-the-money call, making us directionless, but giving us full exposure to the volatility of the event, how would we have done? And what you see here is, besides one big uptick here where you made back, 5% of your gains or 5% of your losses, you actually do very poorly, right? So you would be down 42% in 3 years buying options around the earnings for this if you were to play an at the money straddle. So we need to really keep this in mind when we are thinking about taking a long view on options here. We need to be careful because there is always a risk premium with holding things over these earnings events, right? You have a lot of big funds coming in trying to hedge their positions for these events because they can't afford big moves. And then you also have a lot of retail traders coming in on the call side, buying up the calls, trying to take a directional bet. So we need to keep those in mind. Some positive news if you wanted to take a long position though, or some positive news if you are also still in the agreement that we should be shorting this, is that in Q2, we actually have on average very small moves with a very small range of moves as well, right? So when we look at the events, right, this thing doesn't move between any more than 8%. So the implied volatility is on the high end of how much of a move we typically can even see in Q2. So looking at this overall, it's a pretty clear trade that we can short volatility here, right? Keep the position small, right? The edge isn't massive, right? We're looking at like a 2% edge, but that's a 2% edge that we can capture, right? And it's all about taking out as much of the gamble as possible here, right? So I would say short some volatility here. Make sure to buy the wings when you sell your straddle. So you want to be selling an iron condor. The reason that's so important is, this thing has moved 12% in the past, right? 12.87% back in August of 2019. Last earnings, it moved 12.4%. It could move big again, and that could be why the implied move is higher than average, but I still think it's a good short vol opportunity. So you want to be shorting the volatility here. Remember, when we're trading options, we're not taking a view necessarily on just what direction something goes. The real power of options comes when you understand that you can take a view on not just what direction, but how much something is going to move, in what time period is something going to move that much, etc. So we're more interested in the size and magnitude of these moves rather than just what direction they go. That's just one piece of the puzzle. So that's the way we look at earnings. And now that I've gone through that for JD, I'm actually going to break down a couple more trades for you, right? We're going to go through a couple ideas. We're in our last week or two of earnings here. So I think we should take full advantage of it while we can. So I'm going to do a quick scan with my tool here. What this is up at the top here, this is a tool that lets me scan through all the earnings trades that I have loaded in. So we look at 1,400 of the most liquid equities. Reason being is if there's no liquidity, there's no point in looking at it because we can't place a trade. So let's go to the earnings date here, 2020-05-13. I think it's the 13th, right? Time of day. Let's look at the ones that are releasing after hours today. Now, here's where we add in a couple more things, right? So I want to have, I guess my tool just did a little update. Maybe I clicked the back button by accident. Okay, so let me just throw back in those filters there that I was looking at. Here, let's close out some of this stuff. So let's have a look here. Earnings date, we want 2020-05-13. We want after hours, so I'm just going to filter this to, we only have a couple things after hours today. Okay, I'm going to look at tomorrow in the morning. 2020-05-14. Okay. Let's look at tomorrow morning. Right, so these are things that we can still trade today. Average option volume, we're going to want this to be a little bit higher. We want to make sure this is something we can trade. So I'm going to set that to 2,000. Oh, look. Okay, perfect. So we do have some trades here. And I want to keep the price of the stock to above $15. So let me just make an adjustment there. Actually, no, we're okay with the price at what it is. Okay, so now what do I want to look at here? I want to look at the implied move versus the realized earnings, right? So this is the move that happens on average, and this is the implied move for this event. So I want to sort by that. so I can get an idea for what's the market expecting there to be like a bigger move than average in, right? And one that we see right off the bat is NCLH, right? So the Norwegian Cruise Line. So let's take a look at what's going on here. Wow, would you look at that? So with this, they're expecting there to be a 8.3% move for this company on the earnings event tomorrow morning, right? When on average, this thing only moves 3%. So we need to be really cautious here, guys. Like Norwegian Cruise, obviously there's a chance that it moves pretty big because obviously they've been in the news a lot, right? It's a cruise line. Cruise lines have really taken the cake in terms of publicity over the last little while, airlines and cruises. But if we look at how some of the other companies if we look at how like the airlines moved, right? We go to AAL, right? How did this move? Right? They had an implied move of 20% and they moved 4%. Let's look at UAL. Implied move of 16, moved 10. Did CCL come out yet? Right, so this is actually a cruise line. Let's take a look. Implied move of 34, realized move of 20%. So when we're looking at NCLH here, right, the odds are that like if we're thinking that this thing is going to be a big mover because of the news that's come out, what we can see is other companies that have had similar news come out in similar industries didn't move that much. Right? The market drastically overstated how much they were going to move. And it's doing it again here, right? They're stating an 8.3% move, right? So tomorrow morning, 8.3% move off the bat, when in reality, this thing only moves 3% on the earnings. So even though this is a stock that could move big and like everyone thinks it's going to move big, I bet if we go to StockTwits, you're going to see a bunch of people chatting about it. But what we can see here is that the market always overstates it for this. Last quarter was the first time they didn't. And my bet would be they're going to overstate it again. Right? We actually forecasted it to be a lot higher just based on the sentiment in the market, the way the news had been going. But given what it is, what the average move is, and the fact that in all similar industries, the move has been overstated just because, the irrationality in the market, I would say that it's a pretty good bet to actually be on the short side of the volatility. So not shorting the direction. We're not saying bet on the stock going down. We're saying bet on the options being too expensive compared to how much this thing's going to move. Remember that you can think of the options as insurance around moves on these earnings events. And what we're saying is the premium that people are willing to pay costs more than the damage could be done to the car, right? So even if there is a small crash, the amount you're going to have to pay out by selling those options is going to be less than the premium you collect as the provider of that option. So I think that's a really good trade, actually. There's a chance this thing doesn't move at all on the earnings, right? You just want to make sure that you get in the position tonight at 4, you get out first thing in the morning, manage your position correctly. Don't go crazy with the size, and you should be looking pretty good. So let's take a look at a couple other ones here, right? If you guys have any questions about that, let me know. I'll be happy to break that down for you. Let me see here. If I go to Wix, let's take a look at Wix. I was going to use these guys, but no, didn't want to use them for my website. So historically, buying options, not very good, not something that we want to be doing. But the edge is not massive this time around, right? If we see there's been times in the past where they've said there's going to be huge, huge moves, and the move's been absolutely dismal or tiny. But for this event, it's not that drastic, right? Like it's pretty in line. And we've seen that over the last couple events, right? It's been pretty in line, and we're pretty flat here. So looking at this, there's no real edge. I wouldn't be taking a trade here. I would just keep scanning, looking for other trading opportunities, looking for ways to make money here. That NCLH trade is looking really juicy. I think that's a pretty good one, guys. You should consider hopping on that one. Man, I remember last week, 2 weeks ago, if I put in these filter criteria, just looking for earnings coming out tomorrow in the morning, I would have 4 pages to look at. Sucks that I only have 5 to look at for tomorrow morning. But if you guys have any stock in particular that you want me to analyze, I'll be happy to do that for you guys now. If not, I'm going to go through this list here, and then we're probably going to wrap it up for today. Let's keep focused on the earnings events for the remainder of this week, just because earnings is a really exciting time to trade. There's a lot of edge there, and in between earnings, we'll move away from the earnings events and focus on strictly volatility trades. So trades that you can just take and then manage, over a week or two or over a day, just until the edge goes away. We'll start moving more into that. So GDS holdings, obviously, if we look here, not one that you really care to be buying options around, right? And like I said before, you're going to see this a lot, right? This is a very common P&L for buying options around earnings, right? Like unless like remember, this is a directionless buy, so you're buying a straddle here. Obviously, this could be a bit better if you happen to guess the direction every single time, but there's a reason why most people view earnings trading as a gamble, right? The reason why most people view earnings trading as a gamble is because they haven't found a real edge there, right? So I know there's not a ton of you guys on this live right now, but that's an amazing thing for those of you that are, because this information that you have here, what I'm sharing with you guys, I've tested this over a decade of information, a decade of data. How does using this information perform when you're using it to evaluate earnings trades? And the results are phenomenal. Like what I do on my back end when I'm placing my trades is I have like a factor system that I build around this, which really informs me as to like how good of a buy or sell is it. But this is all the data that I'm using for that analysis, right? And what I'm doing with you manually here is basically showing you how I walk through these types of trades. So, when you can really master this stuff and start to go out and find this information yourself, you're able to, or if you tune in here and break down a trade with me, obviously. But what you find is that you actually have a real edge going into these earnings events, right? In the last 4 weeks, we've probably placed, 100 trades and we've come out extremely profitable, right? These irrational markets are amazing times to trade earnings events when you have the right information. And maybe we'll try and isolate our P&L for the last month or two, and we can show you how we've done. But it's phenomenal. It's been absolutely phenomenal. So let's break down this one here, right? When we look at GDS, right, the implied move is higher than the average move. And when we look historically, the market usually, actually not always, but it's usually pretty close with its predictions. I'm not seeing a huge edge here. Like obviously just given the fact that 58% of the time it moves between 0 and 5%, I would say you're probably safe here buying or selling the options if you can get a good price for them outside of it. Yes, if you look at this, there's some pretty big skew. So you could, you could definitely sell something here. You'd be doing all right. One thing that gets me a little bit worried though, is actually that this relative action is really low. So what this number tells us is how many people are trading around this compared to how many people usually trade around this stock. And for a company with earnings coming up, to have low relative action is kind of a weird thing to see, right? You're like, why is the relative action low right now? Like, wouldn't more people be flocking to this thing to trade it around the earnings event? A lot of people like to trade earnings. So when we're seeing low relative action and we're seeing this uptick on the call side, plus obviously this massive skew on the other side. So basically what this is telling me is if the left side of this is up, it means that there's more demand for the calls. The call demand is being pushed up. And when the right side is up, it means the put demand is being pushed up, right? So, and when demand goes up, that means price goes up. So what we're seeing is people are willing to overpay for both the calls and the puts right now. So when we see people willing to overpay for options out of the money, right? So they're always like, give me it at any price. Just give me it at any price. But there's not a lot of people trading around this event. It causes me some concern because it's like, who's buying these things? Who's this small minority of people that are willing to overpay for these options? So when I look at this, honestly, comparing this with the edge that we have, I would probably stay away because I wouldn't be surprised if we wake up, tomorrow they come out with their news and we see a big jump in this thing. I wouldn't be surprised at all. Calling it here, guys. If I get that right, you got to subscribe. So that is what I'm going to break down for you guys today. If there's anything else you want me to break down right now, I'm going to hang out for a couple minutes here. Maybe look at a couple of other little things. But if you guys don't have anything for me to look at, I'm going to probably wrap up this live in a few minutes here. So yeah, let me know if there's anything that you want me to look at in particular, and I'll be happy to do it. Let's look at NCLH on StockTwits quick. Yeah, I think NCLH is a great trade. Let's see what the retail guys are saying. Man, I hate how slow my computer is sometimes. Absolutely lethal. Okay, NCLH. So many bears are interested. Okay, cool. Sentiment is up. 78. Wow, so many people are bullish on this thing still. I don't know how so many people are bullish right now. Like, the market has not got to that point yet, in my opinion. Right? Price is still down in the bottom. Sentiment's up. Message volume has actually come down, which is kind of interesting. You would think it would stay up. 16,000 watchers. What are most people who are bearish saying? This is very undervalued. You don't think they can rent rooms in the ship on port. Wow, it's really going to save their billions of dollars in losses. Yeah. Okay, cool. So like looking at this, right, I would do a little more research. I would look into like how much information we have about what their earnings are going to be. Right. With this, it's pretty easy to calculate what their profits are. Their ships have stopped running. You can calculate the revenue that comes off the ships. Right. You can look at their balance sheets and their financial information to see what is their overhead, how much cash do they have on hand, what's their float, how long do they have to live. And if you go through all that stuff, you'll actually be able to go in and say, okay, there's not really going to be a big surprise here. Most likely. That's my assumption right now. And that's the same thing that happened with all these other companies, with AAL, with UAL, with all of these other ones. There was no surprise. We knew what was going to happen. So when we went into the event, it was an easy short. And I'm thinking we'll see something similar here again. Make sure to manage your position size correctly. And, good luck, everyone. Hope you guys make some money on this trade. So I see that there's no questions right now. So I'm going to wrap up this live. If you guys have anything you want, shoot me a message on Instagram @predictingalpha, or you can send me an email, sean@predictingalpha.com. I'll be happy to help you guys out with anything you're looking at. So until next time, guys, we'll see you tomorrow morning. Have a good one.